Hey guys, it's your favorite realtor here. Welcome to our first time home buyer program. Alrighty, we're going to go over a few things to help you through this process because we know it can be very tedious, right? So to begin with, we're going to start with home shopping and working with a realtor. Okay, so 90% of the buyers and sellers, they start their search online. Zillow, Trulia, Redfin, Realtor.com, Home.com, HomeSnap, and things like that. But what I would say is what you should do is really consider, and I think it's a misconception that you have to come to your agent, wrapped up in this pretty bow. That's not the case, actually, So what I would recommend is first you hire a realtor, because what you must understand is the realtor that you're hiring is going to work specifically for you. So it has your best interest at heart. We're going to do what we need to do because you've hired us to do a job, right? So now, and another reason is because this realtor has access to details of properties and things like that. We have insight on some things. We have access to most mortgage and the owner records. So we can get some background for you, and we can make sure that the home not only fits your budget, but is also a good investment, because you know how they say everything that looks good to you may not be good for you. So that's the reason why you want to, make sure you get a realtor that will have your best interest at heart. Okay. Now, let's get into it. Like we're about to go over, let's, get into the real scoop of some things, right? Because I'm a house detective. Okay. I'm going to find out the information for you. So I'm going to do a lot of the gritty work for you so we can make sure that you're making a sound investment, because this is a big purchase. You're already going through enough. So I'm going to help you, prepare you with the lender that you need. And this lender is going to be somebody that I've vetted, that I've worked with, and we're going to get you to the closing table. And we're going to make sure that you have the best deal, programs that fit your profile. Because as I tell everybody, purchasing a home is like your fingerprint. There's not one set thing that works for everyone. So I know a lot of people have their insights, even someone that may have bought 20 homes. That doesn't mean that they can help you because they don't know your intricate details, okay? There is a lot of misinformation. And so I also ask people, when you're going through this process, please make sure you kind of keep a rein on who you tell, because sometimes you can think that you're getting great information, but in turn, that information was for something in the past. It's not related to today's market, okay? So you want to have a realtor best friend. That's me. Because what I work to do so hard is, I want to give you that peace of mind. I am that expert. I'm going to be the expert working for you on your behalf. This is before and after you get the keys. I'm not changing my number. I've actually had this same number for 20 years. So I'm not changing my number. I'll be here before and after you get your keys. I want to be a community resource for everything. I still have clients when things go wrong at their house. I feel great that they do call me to ask me, because at the end of the day, at least I know that I'm doing my job. I'm doing something and I'm making them feel that they can trust me. And that's what I want. I want to let my people know you can trust me because I'm here beyond the deal. Okay. So now we've done that. We've got you approved. Congrats. You're ready to shop. Now what do we do? Okay. So in finding that dream home, we have to make an offer and a ratified contract, right? So buying new construction, let's tap on that real quick. If you're buying new construction, you will absolutely need more cash. Now, when you're doing pre-construction, something that's already built, there's programs and things like that. And that's where we're going to go over as well. But buying new construction, you will absolutely need more liquid cash. Okay. Now, what makes up an offer? Now, an offer consists of your earnest money deposit. You'll hear throughout the process, you'll hear it called the EMD. So don't forget, the earnest money deposit is like a security deposit. So it's usually 1%, but it's not saying that it has to be. Sometimes it's variation. So we'll talk about that to see what your specific situation, what it entails. Then we'll have the buyer closing assistance, contingencies, and the home warranty. Now, that buyer closing assistance is if we're asking the seller to help pay for some closing costs. And we'll go over a few of the contingencies as well, and then home warranty a little later. Okay. So what are the contingencies? You have the mortgage loan. We need to make sure that you have a certain amount of days for the lender to approve you for that loan. Then you have property inspections. So some people do as is with no inspections, and some people do with inspections. Now, we do property inspections. We kind of see if we're going to do a 3-day, a 5-day, or a 7-day. Some people do 10 days, depending on what's going on with the property and things like that. But we want to make sure that we get that home inspection completed and the report back, as well as the report back to your agent, so your agent can then discuss what you would like repaired and get that back to the seller, so we can keep the negotiations going. And then you have an appraisal contingency. So we'll have a certain amount of days to get the appraisal done. I usually do not order the appraisal until we have the inspection piece taken care of, because we want to make sure that this inspection piece is taken care of, so you won't just be paying additional money unnecessarily, because some sellers are not willing to agree to do certain things. So then that's when you would need to decide, okay, I'm willing to pay for this, and then we can move forward. Okay. If it's a seller's market, what that means is they're getting multiple offers on the property. The seller have a lot of room to be choosy. And so in turn, they reject offers because of the competition, right? But if it's not a seller's market, then you have, a little bit more flexibility, right? So so that's what that means. So basically, once we put the offer in and your offer gets accepted, now what, right? So that's when all of those contingencies start. We're on a clock, we're on a timer. So we have to make sure that we work together and we hit all of these contingencies. So I have a team in place that will make sure that we stay on track with all of our contingencies. Okay. So home inspection, as you see, 10 days max. Your home inspection is roughly $500 to $675, right? Because you want to make sure that, you get your home inspected, because you want to make sure that it's safe, it's structurally sound and things like that. Now, your homeowner's insurance, depending on the property. So homeowner's insurance, you could get that you can get a quote. So you don't have to actually start the policy, but we do need you to get a quote. So you can call your current insurance company if you have one. If you have renter's insurance or auto insurance, just call your current company and ask them for a quote. Okay. Then you choose a title company. If you don't have one in mind, we could refer a title company to you. And the title company is going to be your friend. That's one of your best friends. They're going to make sure that your house is lien free, and make sure when you own it, you'll be owning it just lien free and clean. Okay. Your earnest money is deposited. So what I do and how I do it is I send a wire request within 48 hours, and I need that wire request fulfilled in that 48-hour period, so we can make sure that we're keeping on track with our contingencies, right? So now that we've met the contingencies, now what, right? So all of your loan obligations are met, and it's time to settle. So after you've done everything with the lender and the title, everything is set, right? Then you have title is responsible for the proper transfers of the property. So that's why I say the title is going to be your best friend title company. Your settlement officer is going to handle the closing process, right? So it's going to be a lot of documents to sign. So the good thing about it is most of the documents you would have already seen previously, because the lender is going to send you a lot of their docs and you're going to look over it. So you have time to read over what you're signing. So then at closing, it's like you're just, you're reading over it, but it's not a document that's foreign to you. Okay, it's going to be lots of documents. Now at closing, make sure you bring your ID. Your ID must match what you've taken this loan out in. Make sure your name is correct as well. And then they'll also give you your wire instructions for closing. So that will come directly from the title company. Because of fraud, I love it that they make sure they're going to send it to you, and then you can reach out to them to double check and triple check to make sure these instructions came from you, which is the title company, and then you proceed to do that. And once we're done with that, congratulations, you get your keys, right? Yes. Okay, so let's go over a couple of things. What type of insurance will you need when buying a home? So these are the types, right? So you'll need title insurance, a lender's policy, homeowner's insurance, and flood insurance. In some instances, you won't always need flood insurance, but title insurance I always recommend you get, because title insurance ensures that it's a policy that's telling you no matter what anybody forgot or may have missed, if a seller went and did something slick, took out a lien maybe a day of, the day before, you're protected. So you want to just be protected. Like if nothing else, you want to make sure, because you want to be able to be protected on your title, that to make sure that house is yours. A lender's policy, you will have to purchase an owner's policy to protect your financial investment against someone who sues you, saying he or she has claims against your home before you purchased it. So that's the lender's policy. Now, homeowner's insurance, that is, of course, if you have roof things and things like that. So that's the different insurances. You want to have your homeowner's insurance and things like that. Now, it depends on your profile, the different type of loan options and down payment assistance that's available to you, okay? So there are 4 types of loans, right? So you have FHA, conventional, VA, and USDA, okay? Now, the down payment assistance programs, it helps buyers reduce the cost of purchasing a home, right? So some DPAs, they will pay all, just a percentage or a flat amount. But what you must understand is you're using other people's money. So, let me clarify that. Some have interest free, and then some have a time frame that it's free. But some do come with a fee because you're using other people's money, right? So it's still a great thing, because if you need it, then it's a great thing to have. Now, one thing about DPAs are they do come with their own interest rates, right? And they have their own set of requirements and their guidelines. And so that's what the lender partner that I introduce you to, that's what they'll go over with you, the different options, and then you'll get to choose, okay? So here are a few program options. So under the FHA, we have Shinoa. Shinoa has a 3% and a 5% program. The lender will go in detail with you what those different programs represent and what the qualifications are, okay? Then you have conventional, 3%. USDA is 100% down payment program. That's for a specific area, okay? And then you have your state programs. So you have HPAP, which is an amazing program in DC, MMP, which is for Maryland, and then Pathway to Purchase. So those are a few, those are the programs that are available. And then there are some others, of course, and anything that you qualify for, trust me, when I say that I make sure that my lender partners know whatever my clients qualify for, you make sure that they get it, okay? Now, let's talk credit. One of the biggest myths is, and I run into it a lot, okay? I ask people, okay, how's your credit? They're like, it's okay, but I have some stuff, but it's about to fall off because it's been 7 years. So let me erase that from your mind right now, because credit, if you owe someone, I'm going to put it like this. If you loaned me $30,000 10 years ago and I never paid you, I still owe you, whether I paid you or not, right? So think of it that way. But I say that to say that credit does not automatically fall off after 7 years. The only way it falls off is if the creditor don't update it. So every time the creditor updates it or sells it, the 7-year clock starts over. So let's not worry about that part. Let's do what we need to do, address it the correct way so we can put all of the bad things behind us, okay? All right, and we'll go more into that. What determines your credit score? The payment history, that's a big thing. A lot of people don't understand. You actually can be late. Just don't be over 30 days late, and that won't even hurt you. So as long as you stay under 30 days, that won't be reported to your to the credit bureaus. So your payment history, that matters. The amount that you owe, that matters. The length of credit. So the length of time that you've had credit, the longer time, the longer periods, you look more responsible and things like that. A lot of times what I'm running into, people don't have a diverse enough credit profile. So that's the types of credit. You don't may have a credit card, or you may have a loan, but you don't have like a credit card, a loan. You need to diversify some things, and we can talk about that. And then some people we will need to any new credit. So sometimes new credit can kind of hurt you, but some people are in a predicament that they need that new credit because that's the only way we're going to be able to build you up. Okay. So me and my partners, we go really, really, really in depth and we help you do it. So we'll take your hand so you can know exactly what to do. So don't worry about that. Now, what you don't know can hurt you. Okay. So this is a chart of how your credit is, the ratios, right? And so payment history, you see, that's the biggest one. That's 35%. That's 35%. That's how it's looked at, your payment history. So we have to make those payments on time, guys. We have to be on time with our bills. All right. Even if it's late, do not let it go. Don't let it hit the 30-day mark. Okay. If you don't remember anything else, remember that. Okay. The amount you owe, you have to keep it. Really, it needs to be under 30%, but sometimes never go over 50%. And I'll go over that with you as well. But the amount you owe, that's looked at, that's taken into account 30%, right? The length of the time that you've had credit open. That's why it's important to have those long years, right? You need longevity. And if you have a credit card, I don't even care if you're not using it. Please hear me clearly. Do not close any lines of credit. Don't close anything. Don't close anything. Please have the console first. Do not close anything. Okay. Now, the types of credit, like I was saying, we need to diversify. We'll help you go over that as well. All right. And then new credit. So that's how this chart right here is it's how they judge your credit. Okay. So I hope this helped you, but make sure you schedule that consult so we can make sure that we get you on track, right? So we need you on the right track. All right. So I look forward to talking to you guys soon. Bye.